Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Dubai yet again. Today is my last day here in Dubai and I'm at the airport, and I wanted to get a quick video out to you before I catch my flight. And hopefully the next one will have better audio and video calls since I'll be back at the studio. What did I want to talk about today? Today I want to talk about what Paul Tudor Jones has finally come out saying. He's a famous hedge fund manager in the United States, and he has come out giving some stark warnings about what is happening in the American market. And I thought we should definitely hear about this. What is happening is there's an AI bull run which is going on. And he had witnessed what had happened during the 1999 dot-com boom. And he feels we're very close to achieving such a catastrophic collapse in the market as we did during the dot-com boom, like I said in the last video. But he says there are certain things which are very different, which is where the American government is, and where American society is. And he says those things are going to make a massive difference, and of course, the American deficit. Of course, he says as investors, we should not panic, and we should take each opportunity like this as an opportunity to find investment and to stay invested. But like I said, the Nasdaq did correct, and the chart briefly moved in April, that is, thanks to the initial tariff knee-jerk, market corrected, and then post that it continued rising and rising. And that is the same thing what he's talking about. He's comparing 2025 to the late 1999 dot-com setup, where euphoria, tech rallies, circular financing, and retail FOMO was happening. Circular financing is what Anand has been talking about in Nvidia, what they did with Intel, what they did with OpenAI, and now OpenAI has come out saying they're investing in AMD chips yesterday. So this is what circular financing is, where really no currency or no cash is actually transacted. What is transacted is on, I'll give you a product, you in turn will give me some share of your company, and there's no actual product or shares of company being transacted. There's all more like accounting wizardry which is going on. And he says more and more of this is happening in the AI, and we should be careful. He says back then internet companies bought each other's products to boost numbers. Today AI companies are doing something similar to raise capital and to buy more chips from each other. So if you look at this, from the lows of April, from the tariffs to where we are now, it's gone further and much more wilder from what we were before. So many of these stocks are not priced into earnings, but they're being priced by potential. And that's the same word which is echoed in 1999. The potential of these internet companies, the potential of this, potential of that, fueled the dot-com boom and the internet boom of the 1990s, sending stock prices soaring. The same thing is happening right now with AI, where we're only talking about the potentials of what these companies can do. And case in point, even if you look at this OpenAI deal, which is agreed to buy $10 billion worth of chips from AMD and could even take a 10% stake in it. So all this is again into the future. It is not current. It is not things which are happening right now. It is what is going to happen in the future. And if you notice, Nvidia has been saying for the longest time that they don't seem to be thinking of making profits or breaking even till well past 2026. So taking all this in consideration, a lot of you are feeling like that you've really left out this AI boom. I want to rest assure you, we are nowhere near missing out AI booms here. If anything, you should be glad and pat yourself on the back that you managed to stay out of a massive bubble which is frothing in the market. And if you see the warnings he's saying, in 1999 the Fed was tightening and the US had a budget surplus. Now here the rates are cutting, right? And the Americans are running a 6% deficit. So if you see the monetary policy in combination to where we're happening, this has not happened since the post-war in 1950s in the United States. So cheap money, government spending, okay, and fueling this runaway rally, but also set up by what's going to follow will be a brutal correction is what he's saying. And I think he's quite spot on. The reason why I keep echoing what the people are saying is because a lot of you feel me and Anand are very biased in what we're saying, and we're not really cued into what is happening. So that is why I try and bring you viewpoints of other people who are considered, industry experts too, and who have been in the market for a very long time, who have a deep understanding of what is going on in capital markets and especially in stock market. And to give you an understanding why there's a lot of speculation and FOMO frenzy happening. Greatest price appreciation always happens in the 12 months before the talk. Remember that. That means the graph goes up like this, like this, like this, like this, like this. Before the final crest tipping over and the wave crashing down, that is when the maximum acceleration happens. And it seems like we're really getting close to entering that phase where retailers jump in, fund chases momentum, and everyone fears of being left behind and everybody's chasing it. Any conversations I have with friends, I have people when I meet you guys, when I meet you out and about, all of you are asking us, why aren't we talking about AI? Why aren't we talking about this? Well, this is the reason why we're not talking about it. I'm sorry that if you didn't get on board to Nvidia way back 2-3 years ago. If you did, yes, you're looking at a lot of profit, and I leave it up to you to do what you want. But I did not jump on to Nvidia 2 years ago, and I don't plan to jump into it now because it is nowhere near any sensibility looking at it as a retail investor. Between now and by the year end, owning gold is going to be the key to this. And this is a classic move, contrarian move to this kind of markets. When you see markets like this, it is best to run to gold and to hold gold. Of course, holding securities such as short-term bonds also makes sense. But if they don't have the courage for that, what you can do is rush to gold. And the market seems to be showing this more and more. Gold is almost near touching 4,000. And we couldn't have even imagined this just a few months back. Forget the year back. A few months back, gold hitting 4,000 seemed like it was only going to happen next year. Looks like by the year end, we would have crossed 4,000 and we'd be well into 4,200. And if this continues, this frenzy, and they're saying the early stages of this acceleration at the end, we're running the early stages of the acceleration, we can see gold fueled even more. That is just on the terms of stock market and what is happening. Now, if you add this with macroeconomic news and geopolitical news and what is happening with Russia and China, then gold is going to go even higher. So, at the same time, gold is not a long-term investment. If you're looking to hold short-term cash for a year or two, gold could be a great place to park it. But if you're looking at something for 10 years or plus, I would say looking at the equity is still the best option. Only thing is make sure you're buying it off value and not buying things which are just something which you heard about or something which you just believe is a great company. It may be a great company, but if it's not at a good price, there's no point investing into it. So this is what I wanted to share with you today as I'm in Dubai airport trying to catch my flight back to Chennai. I hope you had a wonderful day and you managed to get some tiffin coffee done. And I will see you tomorrow from the studio. Thanks for watching Be Rich today.